I saw this YouTube video or this headline, and it is Andy Hoffman, can you spell force majeure? And this always talks about the potential of a Comex default. It's going to happen, and eminently, these are the headlines that we see. And before I continue on, this is not an attack on any individual. Andy Hoffman has been on my program, and he was nice enough to come on. So I'm not going to diss him there. And I know that Kerry Lutz interviewed him in that interview, and I think on the Financial Survival Network website, my work does appear. The webmaster, I forgot his name, he does post my work. So I just want to point that out there. But when I do these videos, it's not to attack anyone, it's just to analyze what's going on in my head. But anyways, it talks about a force majeure, and we did see other headlines before saying, hey, Comex is going to default this and that, okay? But I wanted to show you what's been going on for the past 6-7 years, and we could see a similar trend. And one more thing before I do go into this video now. That interview was sometime in January of this year. January, February. But anyways, let's look at this. First Nickel, Then Silver by Theodore Butler, aka Ted Butler. This article was posted August 21st, 2006. This past week, the investment world witnessed an event that has only occurred rarely in the past. I am referring to the extraordinary developments in the nickel market on the London Metals Exchange, the large base metals exchange in the world. Due to an unprecedented scarcity of metal, the LME was forced to revise the delivery terms of its nickel contracts. In return, allowing short sellers to delay delivery of metal. A daily penalty fee of around 1% of the contract value was payable by the shorts to the long holders. And then it goes on and on and on. Then it goes on later in this article. Fortunately, there is something else that you can do. You can take the debacle in LME nickel as yet another confirmation as what will happen in silver and position yourself accordingly. If there has been ever an explanation point given to buy and hold real silver, it has been given to you by the LME actions in nickel. If an exchange that has been in existence for hundreds of years can suddenly terminate delivery obligations in its contracts, how do you think it will be for those issuing pool and leverage accounts in silver to do the exact same thing? And then his message is go and buy and hold real physical silver to avoid a Comex default. So this was written in 2006, August of 2006, and this is approximately close to 8 years after this article was written, okay? Comex gold and silver markets hurtling towards default. This was written in late October 2008 when Lehman crashed, the stock market was crashing, and so on. Now let's read a little bit of what Mr. Jim Willie has had to say in regards to this. The Comex gold and silver markets are each hurtling down a dangerous path toward default. The artificial paper price has created enormous physical demand and hampered supply production, if not delivery. The gap between the JP Morgan-led corruption, phony paper price, and the legitimate physical price in actual trading markets has grown sharply. Enough to force a breakdown like in any distorted market. When December contracts in gold and silver are demanded to be satisfied via delivery of the metal, it will be clear that the Comex is running a scam. A default is highly likely. So he goes on to say, hey, it defaults most likely, and the year is 2014. This is not an attack on Willie. What I'm saying is, are there shenanigans going on at the Comex and in the financial markets? Yeah, sure. Is there rehypothecation going on like you saw in MF Global and a lot of shenanigans going on? Of course. But at the same time, these markets do operate, and yes, there are still issues with it. But let's go on further. So we see this article on nakedcapitalism.com. It says silver's down 12%. Big default rumored at Comex. This is written May 2nd, 2011. All of you should remember this if you are interested in gold and silver. Silver hit $50 on the Bin Laden raid around that time, and we did see a huge knockoff of silver then. We managed to miss out on the parabolic rise of silver, and then it just goes on and on. We don't need to read this, but we did see these headlines. This was when silver was at its top. This is on the Silver Doctor's site, and the article is actually a repost, part of the article that came from Bill Holter from Miles Franklin. And the title is Force Majeure was the end game all along. Comex will default in the next week. I kid you not. But once again, I'm not attacking Holter or Silver Doctor. I'm just reading off what they're saying here in this article. I did exchange actually a friendly email with the doc. I think it must have been a month ago. But anyways, let's read this. The Comex will default in the next week or several weeks, and people will be settled with dollars. No more metal will be delivered. So knowing that the game has arrived, they are dumping a massive volume of paper contracts with impunity to push the metal prices as low as possible before the default. This way the shorts do not have to and will not be covered when supply cannot be obtained because of an act of God. They will be settled in cash because these unforeseen disruptions in supply. The price, and then goes on, the pricing structure will now push any and all physical sellers away from the markets, and the door to safety is effectively being shut. Either you own metal or you don't. That's actually the similar language to what was on not Bill Holter, but on Ted Butler's website. What he talked about in 2006. He said, like, hey, buy physical, right? After the closure of the Comex and the LBMA doors, there will be no availability and price will be meaningless. Your ability to protect yourself is right now, for all intents and purposes, being eliminated. That was last year, April 17th, so close to a year ago. This was close to the time where they're running the story, buy silver to crash the banks because of the Bin Laden raid 2-year anniversary. Alright, and then the last but not least, I wanted to get into this one headline. I can't click on the website because King World News is actually picky about copyright. But anyways, it says, John Hathaway, strap yourself in for the Comex default. This was February 17th, 2014. Now, when I look at these stories, at first, when I saw these headlines, I was like, man, I gotta buy some fizz when I was new to these silver and gold markets. But then, as I slowly would start to see this, I saw the same headlines time in and time out. Some people tell me there's a nefarious agenda going on. All I can say is that when it comes to my investing, I would like to buy silver and gold when they're at a discount and sell now at a premium. That's a lesson that I learned. And when it comes to the equity markets as well, buy low, sell high. Or if I'm shorting stocks, it's going to be sell short stock at a premium and then buy the stock back at a discount. So that's my goal now. Now we're going to see all these headlines, whether it's the alternative media or CNBC, that are going to make you go to emotional responses or make you have an emotional response and hit the buy button, hit the sell button. But all I can tell people is, if you are going to invest in any market whatsoever, gold, silver, stock market, ignore the mainstream headlines and do your own research. And yes, I do encourage people to follow all types of media, but at the same time, we need to keep a skeptical eye even on the guys that we like. And also, even if a person is right all the time, that doesn't mean he's going to be right the next time. So that's really important in trying to make money in the stock market. I've been burned and I have learned, and now slowly but steadily I'm making better decisions. And that's how people can actually move forward and become successful traders and investors. So whenever you see a headline in the alternative media or the mainstream media, always think twice and do your own homework. before you hit the buy button or hit the sell button. Thanks, guys.